Hello and welcome to an introduction to the low timeframe trading processes. So far we have been through all of the high timeframe work. I've showed you my swing trading methodology. I've showed you some example trades, and I brought in there quite a few concepts, which obviously we learned in the first section, and showed you how to put them into action. Now what we're going to be doing is looking at the low timeframe stuff. This is primarily for those traders who want to be swing. This is primarily for those traders who prefer intraday trading and low timeframe trading, and want a career where they get in and out of the markets in a short time span. Now, the trading that I use for the intraday perspective trades around London session. That's not to say that these concepts will only work around London session. There is one timing specific thing that is quite a large thing that means you can only that generally means you can only carry this method out on the during the start of the London session. But if you are somewhere else in the world, or you just don't have the time to trade London session, or that is not what you want to do as a career, perhaps you want to trade New York, the methods that you've learned in the previous chapter, combined with many of the lessons you'll learn in this chapter, are going to set you up with a solid basis for intraday trading, regardless of the session. So real quick, before we even get into anything, I'm just going to show you a cool example here of a low time frame trade. This is essentially a textbook low time frame trade, pretty much exactly what we would like to see. This is also one that incorporates the Asian session range. So we're going to talk about timing and session characteristics because you may have no idea what I'm talking about right now, but that is totally fine. I'm just giving you a quick, brief example of a textbook trade for this system. So what we've seen here, if we start from the top, just incorporating the concepts we've spoken about so far. We have this downtrending fashion here. We have lower lows, lower highs. We have the equal lows here, which formed a bit of liquidity. Then we had a small push through, but an imbalance was left open into a 1 minute demand zone. Then the market had a secondary sweep, hit that demand zone, and then we had breaks of structure. If we look to here, we have obviously lower high, lower high, lower high, lower high, lower high. The final lower highs were in here, and this impulse has taken out this lower high, and then actually this higher high as well as these two lower highs too. So what we've seen here is basically everything we've spoken about so far. We've seen some equal low liquidity swept out. We've seen a demand zone retested, and then we've seen a break of structure to the upside. So you can see here, this kind of looks like a nice reversal pattern, the one that we like to see. And if we now look at some of the high interest areas that we could potentially buy from, well, we can see here we have an imbalance into this demand zone. So we could go ahead and place an order on this level with a stop loss just beneath the low there, just to be nice and safe. And for this trade, we can actually target this level here. Now, this is the top of the Asia range. This is something you're going to learn about quite a lot. I assume at the moment you probably have no idea what the Asia range is, what the London session is. I think we spoke about sessions very early in the course, but only very briefly. So I will be breaking down the different characteristics of each session. But just for now, you can know that we can actually use the high of the Asia session as quite a safe target. Now, if we then let the trade play out, we saw a little bit of equal low liquidity also form here. And then after the equal low liquidity, we get a sweep. We are likely to be tapped in like so. And from there, we start to begin seeing the upside. So we see the market begin to break even more structure highs, actually form a higher high in the trend, and continue its movement all the way to that major target. So that is a textbook intraday setup. And as you can see, aside from the fact that we used this Asia session range that I spoke about for the target here, you can see that all the concepts here are exactly what you've already learned. We have liquidity, supply and demand, structure, more liquidity there, more supply and demand there, and that is the overall trade. So very simple stuff. This was all executed on the 1 minute time frame, as you can see. Most of the low time frame trading is going to be executed down here on the 1 minute time frame, 5 minute time frame, 15 minute time frame. And if you've got it, we can even go lower, and I will be showing you the benefit of actually using the 30 and 15 seconds charts. So we do go very low, but it's not high pressure, it's not high frequency, it's not high stress. It's very, very neat, and it actually uses everything we've learned so far. So you shouldn't have a hard time actually incorporating this. So without further ado, let's jump onto the next video. I think we'll start this section of the course out by talking about timing and different sessions, by talking about trade timing, by talking about the importance of timing and the different characteristics of trading sessions. So I'll see you in the next video. Let's get into it.